What is going on, everyone? Welcome to the Investing Bros live show. We're going live once again to cover PCE numbers that came out this morning. And in case you have not checked them, they came in exactly as expected, month over month, 0.2%, and year over year, 2.5%. But the biggest question here, because you don't really care about the PCE numbers. You care about how it will affect crypto and stock prices. We're going to cover all of that and a whole lot more. So do not go anywhere. Make sure to smash the like on whatever platform you are watching. Hit that follow, hit subscribe. But first, before we get into our content, we got to roll our intro. T-Shroom, how you doing today, my friend?
Better than I deserve, Tim. I really am. I'm starting to like these morning streams. Let us know in the chat, how are you liking tuning into the Investing Bros 9 a.m. And Tim, how are you this morning?
Yeah, I'm doing good. I say I'm doing good. I'm that post nasal drip thing that'll come every now and then. I struggled to sleep last night. I had that post nasal drip thing. So hopefully my voice doesn't go berserk. Don't know why that is doing it to me once again. But for those morning streams, yes, absolutely. Let us know if you guys would love to see those come back in the near future. Not making any promises, but it is something that's on the table that T-Shroom and I have considered potentially going back, and doing 9 a.m. streams again. But we got to know that you guys want to see it. Drop some ones in chat. Leave comments after the video on X. Just bombard us with demands that you guys want to see more morning streams. T-Shroom, let's jump right into the data points this morning. Let's go over, to trading economics. Core PCE, 0.2%. Personal income, month over month, 0.3%. Personal spending, month over month, 0.5%. All of these, though, the only one beating expectation and different than what was expected was the personal income. That means people made a little bit more money this month than people were thinking at 0.2. They also were spending a little more than the forecast. So this is even a positive print here as well. But then you get to PCE year over year, 2.5. There actually was consensus that you might have seen 2.6. So could you make a argument that potentially we beat it? Maybe. I think we're going to go with the fact that the forecast was 2.5, previous was 2.5. We're staying right on term. What does that mean for the prices of cryptocurrency? We will get there here in just a little bit, but let's talk about what this means, T-Shroom, for the Fed and Jerome Powell and September 18th decision when we find out, are we going to pause rates again? Are we going to see them cut? And if we do, by how much? I'm going to start this one off, T-Shroom. I believe that this today was nothing flashy, which means that's actually very, very good. The numbers weren't bad and they weren't necessarily great, which means the current plan that we've heard from Jerome Powell, I think to pivot and start pivoting by 25 basis points is right on target. Yesterday, we covered somebody, and I don't remember the name of the person, T-Shroom. Maybe you remember them, but there was a opinion piece prediction, that he said, oh, watch out, guys. PCE is going to come in hot. It's going to be way higher than people expect, and that's going to cause the Fed to deliberate. Well, as we said yesterday, that was his opinion, and we disagreed. And guess what? The bros were right. We did not come in hot. The numbers came in as expected. All of this is leading towards a September rate cut of 25 basis points. And I do believe that will be bullish. But we'll go to the charts here in just a couple of minutes. T-Shroom, I want to hear your thoughts, your opinions. Are you in full agreement, or do you have anything else juicy to add to that take?
Yeah, well, I am in full agreement. Everything you just said was right on. But Tim, the way that I'm kind of looking at this is for the noobs, right? For the noobs who may be new to crypto, maybe new to investing. Somebody told you need to invest in the S&P, you need to buy Bitcoin, and then all of a sudden you bought them, and now you're like, whoa, this market, there's a lot going on in these financial markets. What the heck? Mm-hmm. The Federal Reserve has two mandates, right? The first mandate is to keep jobs at a reasonable level. That's typically around 4 to 5% unemployment. Mm-hmm. The second mandate is to keep inflation at 2%, right? Right now, it's at 2.9%. Okay, so PCE is similar. It's a measure of inflation, and so when it comes out as predicted, that means that gives all the evidence to the Fed that their target of 2% is being reached adequately, right? So that's what they need to be able to bring those interest rates back down, to go from quantitative tightening to quantitative easing, to transition that policy. So
Mm-hmm.
overall, unemployment going up is bad for the economy, but from a market standpoint, if you own assets, this last year, you've actually wanted bad news from the unemployment world, because bad news equals good news in the eyes of the Fed in terms of bringing those interest rates down. Today was an inflation day mostly. That inflation data came in and gave Jerome Powell the green light to say in September you can cut rates. Now it's very, I think, based on this print, I think it's even more unlikely than it was yesterday that they'll do 50 basis points cut, meaning more aggressive cut, more aggressive quantitative easing. But I do think that we'll get a cut. So let's go ahead and jump and see how the assets are reacting.
Yeah, I think the other thing we need to look at real quickly, let's just check in on those predictions. CME Group still predicting right there around 70% that we should get a 25 basis point cut, 30% saying 50, but I'm putting way more stock over here. Same with Polymarket, only Polymarket actually increased the probability of 25 basis points, lower the probability of 50 basis points. This is very encouraging. What we need to know, though, again, we're about to go look at the charts in just a couple of seconds, but I want you guys to know what you're looking forward to over the next couple of weeks of what else can be potentially affecting this decision that we make on the 18th. As we keep going down here, jobless claims seem to come out every single week. So always keeping a thought and an eye on the jobless claims. Unemployment rate will be coming out September 6th. So keep an eye on that. And then September 11th, even though PCE is the more important data that the Fed looks at, and this is the last PCE data before the next decision, core inflation, both month over month and year over year, will come out September 11th. PPI and more jobless claims will come out on the 12th. And then after that data point, we should be locked in. We should have a very, very good understanding of what the Fed is going to do. But let's go take a look at price action right now. It's not special. It's not crazy. This is the 5-minute chart. You can see here pretty much on the announcement, major wick to the upside, up almost to $60,000, up to $59,928. That's what that thin little wick means. But then immediately shot back down. What does that mean? It was an emotional trade. Some people got in and got out very, very, very fast. Right now, the volatility is continuing, which does beg the question, is this going to be long-term bullish or long-term bearish? Well, here's the thing, guys. We're going to have to address more of this in the afternoon show because it's not uncommon for emotional trading to happen for the first couple of hours after information like this. I want you to know long-term, this is bullish. I do believe price will go to the upside. But how far could we drop before we get that bullish pump? Back to my screen here, T-Room. You guys, we talked about this yesterday. We didn't quite make it down into this box. And I want you guys to know I'm not rooting for it to come down to this box. I'm not, other than maybe it'd be nice to buy another dip. If you guys still have some dry powder here. But it's not like I'm sitting here saying like I'm so pessimistic it has to do this. I'm just looking at the data ahead of me and saying, while we've held up this strong support at the moment, we're not necessarily increasing any of our volume down here, right? So volume tells you a lot about buyers or sellers' convictions. Neither of them are really popping off the chart right now. We're kind of just dragging along on some boring time frames. Like if we were to come to lower time frames, we're just on this one, we're actually bouncing off of support over and over again here around 59,150. But if that gets lost and you start to move towards slightly higher time frames, let's keep coming up here. Like, there we go, 30-minute chart. Remember I told you about that huge wick here just about a half hour ago? It only wicked up to our smart trail of resistance and is staying rejected. What I'm keeping an eye on right now is the liquidity chart. We talked about this a lot. This is levels of longs and shorts, liquidation levels. Traders love in seasons of volatility to target the bright yellow spots. And depending on what time frame you're looking at, this is the 3 daily chart. We've got some bright yellow coming back down here towards where? 58,400. That is what marks the bottom of this box, or sorry, the top of this box, 58,400 right there. We talked about this yesterday. If I were to go to the 24-hour chart, on the other hand, take a look at where we have bright yellow here. 58,179, or pretty much just go ahead and let the prices drop for a triple touch bottom of 58,000. Am I saying that this is a definite? Am I saying that this is a promise we're going down this low? No, but you cannot ignore the data points showing that we do have liquidations that far. We know right now that as we wait over the next couple of hours, there's a lot of volatility and confusion with emotional traders happening right now. So for that reason, you have to be prepared for a potential drop. This is what I would heavily suggest. If you're looking to trade this move or looking for a long-term entry, I'm going to recommend, let's pretend you had $1,000 you want to enter a trade with, split it up here 50-50. The first one we're going to take a look at is potentially a move at least back down to this blue line around 59,100. That was a very strong level of support we were looking at on the 5-minute chart with a lot of order blocks, a lot of support and green cloud right here. I know I'm going a little fast this morning, but that's okay. I teach all of this in our VIP trading group. But these order blocks, extremely bullish. That 59,150, keep an eye on that level. Again, it's also the level that you see we have a rising level of support, that blue line in play right now. That's my first buy level this morning. My second buy level, I am going to wait until at least 58,400. When I'm buying these, I'm definitely putting stop losses in play. And so, for example, 59,150, what I'm going to kind of do with that level, I might buy a little higher, like 59,200 almost. I might have this long all the way back up to these highs of 61,000, but I'm going to put a very tight stop loss on this one. I'm going to put this stop loss just below 59,000. Why? Because there could be a psychological level we just dropped to 59, and then that's in play. But if we drop below this level, if we drop below 59 at 58.8, I do not want to be involved in that trade still. I want to cut my losses because my next entry point is going to be down here at 58,400 because that is where we see the greater level. In this case, and I'm going to put my stop loss slightly below those lower wicks. In this case, I get my trade in early. I get half of my trade with $500. If this support ends up holding up, this should be a successful trade. If it loses, I will cut my losses. That's a 0.5% stop loss. You barely lose any money, but then you get your more desired buy-in order with not just $500. Whatever you lost here, let's say you lost like $20, $50, $100. Well, you can just add what's left of that 500 into this trade as well. This is the proper risk to reward ratio of how to trade this volatility and this news, because right now, the way this is moving, it is bullish, which means 59,200, 59,150, that could end up being the bottom. But we also could come much lower towards 58.4, maybe even towards 58. Those things are well in the cards. I still have a stop loss here just in case I'm wrong about this. And for some reason, the markets get even more emotional and more volatile and the price crashes even lower. I do not want to lose all of my money. I still have a 1.3% stop loss on this trade. You always trade responsibly with stop losses and make sure you have a plan for your take profit. That's what we're looking at right now in the world of Bitcoin. But T-Shroom, what about what's happening in the stock market? What are you seeing this morning? It's not quite 9:30, but we do get to see a lot of pre-markets. I'm going to throw this one to you and let you kind of break down what you're seeing in the stock market world.
Yeah, I mean, taking a look at the triple Qs, right? There's the ETF for the NASDAQ. You can see we're, let's see, by percentage up 0.8% here. And that is in the pre-market. Okay, so that's generally bullish. The rest of the indexes are not going to have a pre-market quote, but Tesla or Oracle, up in pre-market here. Tesla also up a pre-market. Nvidia up in pre-market. Let's see the percentage on this one. Just about 1%, just under 1%. Well, the market will definitely be watching to see how this trades the rest of the day. I'm on the daily chart. Nvidia earnings came out favorable yesterday, not as favorable as in the past, but still favorable. They're still returning a ridiculous amount they're returning a ridiculous amount to shareholders. But right now it's really teasing throughout the rest of the week, throughout the rest of today, trading, the last day of trading here for the week. Can we get a print above that midline of the Bollinger Band is going to be the question that I'm asking. And if we can get a whole candlestick printing above that on today's trading candle, then that's going to signal to the investors that NVIDIA actually has not topped out. It is ready to continue to push higher. But a lot of investors kind of zooming out on this chart and saying, hey, NVIDIA, it's had a good run. AI, how many companies are out there really making a profit from AI? Really only a couple, right? Is potentially the AI bubble ready to burst? NVIDIA putting in consistently lower highs, right, could be signaling the early warning signs that risk assets are actually ready to turn over and go back down. One of the things investors will be looking at today to help answer that question is, can we get a candle print really above 117, really above that midline of the Bollinger Band level? But overall, the market is looking like it's wanting to open up positive today in pre-market. Pretty much every megatech stock that I'm looking at, Apple, Microsoft, everything is looking like it's going to be opening up positive, including the QQQ. So that's generally bullish, right? Generally bullish. Yeah. I saw a couple of questions in the chat because we went over the next upcoming economic data prints. September 18th is the next time that the Fed will be issuing that press release and the important decision about a cut or another pause. So September 18th, that's the day to watch. I believe we went over it today, Tim. There's some more jobs data that's coming out, and then we also have we will have one more CPI print. I believe it's on the 11th of September. So those are going to be not only important for the market to watch, but for the Fed, we'll be looking at that to make their determination of how steeply they cut, or if they cut at all. Another potential outcome there. But yeah, we had one chat here. I love this from Joe Nickel. He said, "Wake me up when September ends." An awesome that might be resonating with some of you. Let me know. This is a song from Green Day. That's a little bit of a cultural moment there. Is that kind of how you feel? You would just want to kind of tune out until September's over. Historically, sometimes September can be red. Army Piper celebrating 8 months of membership. What is up, Piper? He said, I don't think we can celebrate good Fed numbers until revisions are released and we make it through the historically red September. So folks looking at September coming up fast and thinking, maybe I'm just going to go to the beach and just tune out. I think it's more important now more than ever to be attentive to these markets and be paying attention, trying to extract alpha. What do you think, Tim?
Yeah, I mean, I've gave this opinion before. So September, this concept of September is always red or historically red. Maybe you can look at some data points and show in the last 10 years, you've seen more red Septembers than green, but you have still seen green. I'm not a fan. My analysis, I'm not a fan of this month is usually, so therefore it will be again. Right. A lot of times those have more to do with coincidences than repeated issues. Now, you could make arguments for things being repeated around Thanksgiving, like in November, or around Christmas. Why? Because that tracks spending habits and company habits. But to my knowledge, I don't know about anything really in September, other than you can make an argument. Maybe it's the last month of quarter three. Companies are kind of trying to move some stuff around as they prepare for their historically greatest quarter, and that's quarter four, when we have major holidays here, at least in the United States. That being said, anyone who thinks that September has to be red, that's not the truth. There are Septembers that are green. It all depends on the circumstances. And right now, I want to put kind of a weight. If you're gonna look at a scale and try to decide which of these is more important, let's just put on there September. September, more often red than green. All right, we're just going to put that out there. Statistically, at least in the recent history, it's more often red than green. That's on the scale. But we're also potentially in September about to see a rate cut of 25 basis points, not an aggressive one, not one responding to fear of recession, but one saying, hey, we've been restrictive now for multiple years and it's time to pivot. Historically, those pivots have always been major boosts in both crypto and the stock market, right? So we're putting this scale in order about how September will perform. Yep. One of them, you're looking at history. The other, you're looking at data points of rate cuts. And to me, the rate cut side of the scale drops, and the historical September month it just doesn't necessarily give me a lot of confidence about what that means. So this is a reason why I believe that September is going to probably be green. But I'm not unaware of the fact that as long as volume is not coming in crazy, that's something I mentioned earlier in the video. The volume is not showing strength for either bulls or the bears. It's going to remain in a very boring and sideways range here. We just go back over to my chart here, T-Shroom. We're kind of just bouncing right now. We had a little bit of breakout and a little bit of hope. But as a whole here, let me get rid of my take profit levels here. We're kind of ranging here between 58,600 and then up here towards 60,000. This has been a major range over the last couple of days that until one side starts to come out with higher volume, we're not really going to see this range broken. If the bears start to pile up the sells, and I don't see a reason for that right now, but Black Swan, many Black Swan events happen all the time, then we could talk about that move below $58,000, possibly back down towards 50K. But if we start to see the bulls pick up some steam, all of a sudden we're talking about not just getting back to 61, not just getting back to 62, potentially making a move back up above 65,000. And we told you guys that our line in the sand here on the Investing Bros channel is that as long as we are below 65,000, we are still capable of going lower in price action. But when 65,000 is broken with increased volume and buying pressure from the bulls, look out, because new all-time highs are probably a mere couple of weeks away. Now, that might be more than 2 or 3, but I do think we're measuring in terms of weeks, and it is something we're looking in anticipation. All of this will boil down, I believe, to what the rate cuts look like in September, what the election markets still kind of tell us. We're not going to get into that in this video. We've covered that a whole lot on our channel. But even if you don't care about politics, if you don't care about who the president of the United States is going to be, that's fine. The problem is it cares about you, and the markets in crypto and the stock market absolutely care about who's going to win. So all of those things play major factors into, will we see continual rise in prices, or will we see frustrating sideways action, possibly lower lows coming? I'm leaning bullish though, T-Shroom. I still see a lot more weight on the bullish side. It's just about continuing that long-term patience and about getting the confirmation of the volume we need to be bullish once again. And I really do apologize, people. I wish I could come on here and tell you something more interesting. I wish we could come out with something really, really juicy. I could make the charts just look absolutely beautiful. But the problem is we are in that awkward season where things are really boring. But you know what happens when things are boring? That is the best time to be paying attention and to be making your plan, because the minute it turns from being boring to interesting, we're not talking about Bitcoin rising by 1,000 or 2,000. We're talking about Bitcoin potentially moving $10,000 to the upside or the downside. And you only get to catch those movements if you're heavily paying attention during the boring stuff. That's the kind of stuff that you learn when you're in our VIP trading group. When you join our membership, you can learn to watch the charts with us. You can trade with us, but we also help teach you when to be very attentive, when it's time to take a step away, and when it's time to get risky with your investments. That's how we got to be. We're not going to lie to you. We're not going to try to make stuff up to create entertaining information. We want to see you guys be financially successful the same way we want to be financially successful. And that means we got to tell you the truth. That's what we're doing right here.
Absolutely. Jeremiah Friedrichsen dropping in some pure speculation here. This is looks like a rumor, but if it's true, it could be interesting. Just received Google headlines. JP Morgan says Fed shook by job numbers, will cut 50 basis points. It's possible, right? It's possible. I don't know if that's even a true headline at all.
Let's do a short teaching lesson right here. Don't believe JP Morgan. There's always some sort of alternative motive for what JP Morgan says. If they release some sort of data point, okay, maybe there's some weight to it. But anytime anyone who's been watching our show and tracking JP Morgan quotes and statements over the last couple of years, I cannot think of a single time, T-Shroom, that JP Morgan came out and said something and they ended up being right on the money. A lot of times, sometimes they said something that happened much, much later, but they made it seem like, I remember one time they talked about Bitcoin was going to crash, and and they made it sound like it was going to happen the next couple of days, and then it took like probably weeks, right? But there's been a lot of times where they've called for upward trajectory and price action, and the prices go down. There's a lot of times they call for downward trajectory, and the prices go up. There's a lot of times they predict fear in the market, and then we get some great data points. So, lesson for you guys to learn: always ask why when looking at a JP Morgan quote or an opinion, because they have a track record of lying to their clients for the sake of manipulating people to be emotional, when in reality, they were right on the right track the whole time.
And after a quick search, I can't verify that that's even true. So just so you know, what we can verify is true is this theory here. Pew Pew Cruz said rate cuts at first historically dumped the markets. So this has been subject of much debate, right? And we're in an economic print, early morning episode here from the Investing Bros. So we might as well hit on this and kind of give our perspective as well. Buy Fed rate hikes, sell the first to last cut. That's the headline. That's kind of the Wall Street consensus in some sense about when the Fed goes ahead and transitions its Fed policy from tightening to easing. And so the blue line is the federal funds rate, the interest rate that the Fed sets, and then the black line is the S&P 500. And as you can see, historically, there has been a correlation to when the Fed transitions its policy from easing to tightening. From tightening to easing. So that's important. Not from easing from tightening to easing, from raising interest rates to then lowering interest rates or cutting interest rates. That's what this blue line represents, the interest rates being cut. That did lead in 2000 to a correction, right, in the stock market. It was also happened to be one of the best times to buy, right, is towards the end of that correction. But then you see it again. You do see the cuts come in. First, you see a plateau, a pause back here in 2007, a pause, and then a very rapid cut. Now, let's just pause, and then you see the S&P come down during that period. But let's just pause and do some analysis, right? Because these cuts were not happening in a vacuum. It wasn't like the Federal Reserve was sitting up there and the stock market was just predictably ticking higher, and there were zero events going outside of the Fed sitting there in the stock market. There's a lot of other variables going on, right? In the case back here in 2001, you had the dot-com crisis, right? So the Fed was reacting. Reacting is the key word here. They were not inducing a recession. They were reacting to recessionary forces that were coming about, right? And so they used one of the two weapons that they have to cut rates and try to stymie the negative effects of a recession, try to mitigate the fallout from a recession of the dot-com crisis. Okay. Fast forward to 2007, same thing, just on a much bigger scale, I would argue, right? The financial crisis, the housing market crisis, in my opinion, was a lot bigger, right? So you had a fundamental reason. It wasn't like the Fed just in a vacuum decided, let's cut, and then a recession came. No, recessionary forces started to rear their heads. Holy crap, mortgage-backed securities are overrated, AAA. They shouldn't be that. They should be maybe in the C category. Well, that brought the whole financial markets come crashing down, right? And so the Fed cut rates to try to, again, make money more available, try to throw a life raft out to the economy and to homeowners and to people, right? But it's not a cause and effect, right? It's not they cut rates and then a recession happens. Recession started, so they cut rates, okay? So now the argument is what will happen now? Is it going to be the Fed cuts rates and then there's a recession? That doesn't seem to be what I think is going to happen, right? I don't think that we have some bubble that's about to crash. We don't have a dot-com bubble. We don't have a housing bubble. We don't have a bubble. A bubble, first of all, is undetectable at first, right? It's similar to a black swan. You don't just have a black swan and everybody knows it's about to become, right? So Tim, I want to get your opinion on this, but my overall position on this is we'll have to wait and see. I still don't think it's a 0% chance that we have a recession. I think there's a chance, right? I think right now Goldman Sachs is putting it they just revised it from 25 to 20% chance that we have a recession. But categorically, when the Fed cuts rates, that is bullish for markets. They are literally opening the trajectory, the velocity of money. They're opening up the money valve, and more money is flowing into the economy through the bond market, right? That is bullish for risk assets categorically, full stop. There's no argument against that. Where Wall Street does have an argument for potentially selling when the cuts come around is because historically those cuts have come around when recessions were starting.
Yeah.
But it's not 1 + 1 = 2 here. It's not A plus B = C. Right? It's not that simple. So the question is, are recessionary forces pervasive in the market right now, causing the Fed to cut rates, or are the rates just high and because they were trying to cure inflation and now it's time to bring them back down? I think it's much more the latter.
Yeah, I think even addressing this, I've seen a couple of chats in here. Like, for example, Jason77 said, I'm hearing two contradicting things. You guys say that the market does well after rate cuts, and I hear others say that historically the market crashes after rate cuts. Let me address that here in a second, because another quote I saw in here, and I can't find who said it, so I'm so sorry I'm not going to be able to say your name because I'm reading back through and I can't find it. But somebody commented something on the effects t-shirt, and they said, I think that Jerome Powell could phrase 50 basis point cut in a way that would not be negative. Well, let's back up here. For Jason77, for the people talking about 50 basis points, there are probably two options. There's a chance that they stay paused in rates, but I think the highest outcome is probably that they either cut by 25 basis points or 50. And I know simple thoughts would make you think, well, if 25 basis point cut is bullish, shouldn't 50 be even more bullish? And unfortunately, it's not that simple. I think T-Stream did a great job of explaining it, but I want to go maybe just a little bit simpler with it. 25 basis point cuts would not be in response to a recession fear. It would actually be saying, you know what? Everything is going well, but we can start to pivot and make it easier for our economy to grow. Our economy is not crashing, but it's not thriving either. Let's get it into a level where we start to allow our economy to thrive. That's what 25 basis points does. Responding to the 50 basis point cut, saying Jerome Powell could phrase it in a way that would sound optimistic. He could do everything he wants to try and make it sound that way. But 50 basis points comes across as desperate. We have been raising rates for years now. It's one thing if we've been cutting for a couple of months and they're like, you know what, guys? The economy's still doing so well. We did just a phenomenal job here. Let's actually speed it up a little bit. Let's do 50. Maybe that's a case where you see something bullish. But for an initial pivot to happen and for us to go 50 basis points, even if he says something comfortably, that's not how the markets will read it. The markets will read it as a desperate attempt to overcorrect to a problem. That problem is recession data is looking hefty. That is why we don't want to see a 50 basis point cut. We want to see 25. As far as where a recession is coming or not, I want people to think about this logically. We say this all the time. You got to live in two worlds. You got to live in the world of data and you got to live in the world of reality. In the world of reality right now, yes, things are not good. Food is extremely expensive. My wife came home the other day just complaining about grocery prices. I guess she hasn't been listening and paying attention to inflation. She was wondering why something that would have cost her maybe $80 a couple of months ago cost her $150 in the grocery store here more recently. Now, I might be exaggerating the numbers, but my wife is acknowledging food. It's getting ridiculous to even buy quote unquote cheap food and keep your budget low. That is what every American, and in reality, let's not just talk about America, that's what the world is dealing with right now because inflation is worldwide. That is very real. I know of somebody, we talked about this yesterday about jobs being lost. Well, everyone's saying the jobless claims are actually looking good. I've heard personally hundreds of people that I've known over the last couple of weeks lose their jobs. People in our community have lost their jobs. And that really does sadden me. And I realize we live in that world where reality is life sucks right now. Reality is everything is expensive and I'm making less money than I was before. Sometimes I might even lose my job. I'm making no money. The problem is markets don't respond to reality. They respond to data. And data, whether you want to say it's lying to us or is truthful, is saying that everything's okay. And when you think about this, as we lead into election season, there's kind of that assumption out there that the current administration is doctoring data to make themselves look more favorable. You can be upset about it. You can complain. You can let your local politicians know that you're upset with this, but you can't change between now and November, or in reality, now and January, who's in power. Those things don't change. And as long as they're there, they will continue to manipulate data to make themselves look favorable, and markets will respond in like fashion. So that's the kind of breakdown right there of the difference between 25 and 50 basis points. And believe me, I don't think 50 is happening. I think 25 is pretty much locked in at this point, but we have to wait for that to be absolutely certain. But also, I just want to continue to urge you, whining and complaining and living in reality, it doesn't serve you in the investing world. Get a counselor. Have some friends. Reach out to me and T-Shroom. If you guys need to just let some steam loose, if you need to complain, if you need to let your frustrations go, we're here for you. We want to listen to you. But I urge you, please, 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 when you're investing, don't invest based off of your feelings and your life experience. Invest off of the data points that are being put in front of you, because that's how you will change your situation and create generational wealth. Reality, it unfortunately is not the dictator of markets.
Absolutely. Tim, well, as we close out, just remind everybody, we are the Investing Bros. If you're tuning in for the first time, we usually go live 3 p.m. Eastern Standard Time, but we've kind of been digging these early 9 a.m. streams. Let us know as we wrap up, did you enjoy the 9 a.m. stream here, and would you tune in for more of those? Indicate to us by dropping a 1 in chat here live if you would like more 9 a.m. streams. Tim, I've had a ton of fun. This has been great. Why don't you close us out?
Yeah, guys, if you enjoyed the stream, make sure to smash the like wherever you're watching, both here on YouTube, over here on X. Follow all of the accounts on our X accounts. That's me, T-Shroom, and our Investing Bros account. Make sure to hit subscribe. We just crossed 30,000 subscribers, but let's get to 40,000 here very, very soon. Hit that subscribe button. With that said, also, if you want to be a part of our community, you want the chat. You guys had a lot of fun this morning, but you don't want it to stop. It never stops over in our Discord.
That's right.
Links down below. With that said, we'll see you later today at 3 p.m. for our afternoon live show. Some of you will see you over in Discord where the chat never stops. That being said, love you guys. Adios.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor, the TA. Shout it out loud on the PA. T-Shroom's news, got your word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.